In this video, we will tell you the 9 worst habits that are keeping you poor. It's very crucial for you to break these habits or you will stay poor forever. Money is all about habits and work ethics. If you are negative in these 2 subjects, then you must worry about it. Watch this video till the end to know all such habits that are keeping you poor. Now let's start. 1. Failing to establish precise savings objectives. Establishing precise savings objectives is crucial not just for determining the required savings amount, but also for providing a concrete motivation to save. Without clear savings objectives, you might not be actively considering the amount you need to save and the steps required to achieve those objectives. Overcoming this routine will lay the foundation for developing other saving habits, and it's a simple way to begin. Just take a copy and pen and write it down. Even though it is simple, but many people avoid doing this single task. 2. Spending excessively on unnecessary items. There are several ways in which we may be spending on non-essentials that accumulate over the course of a month. Spontaneous buying can accumulate over time. Before you know it, you've spent far more than you planned on these non-essential items. For those who enjoy browsing through store windows often, we have a helpful approach to break the habit. When you come across an item you're tempted to purchase, jot it down on a piece of paper or your phone's notes app. Then, give yourself a few days to reconsider before making the purchase. Once some time elapses, you may discover that your interest in the item has waned, allowing you to set aside the money you would have used to purchase it. Press the subscribe button and also the like button to know more amazing financial tips and tricks to get rich. 3. Allowing debt to build up. On average, American households have around $101,915 in debt, as reported by Debt.org last year. It has become common for individuals to accumulate significant debt and then struggle to gradually repay it. Factors such as personal loan debt, student loan debt, and credit card debt can all play a role in your total debt. Allowing these balances to build up and only making minimum payments each month will result in paying higher interest over time and postponing your progress in reducing debt and increasing savings. When striving to overcome debt, start by compiling a list of all your debts, including their annual interest rates and payment deadlines. Next, you can start devising a strategy to free up more funds in your budget to allocate towards those debts. Consider focusing on debts with the highest interest rates first using the avalanche method, or starting with those with the smallest balances using the debt snowball method. 4. Failing to plan ahead with a budget. Operating without a budget means you're not keeping tabs on your expenses, progress towards savings goals, or the amount of money you have for discretionary spending. Having a budget is essential as it serves as a tool to manage your finances effectively and avoid overspending. When creating a budget, it's important to consider your desires, necessities, and savings. Following the 50-30-20 rule, a popular budgeting strategy suggests allocating 50% of your income to necessities, 30% to desires, and 20% to savings. Consider slightly underestimating your monthly income to allow for more flexibility in your spending and avoid feeling constrained at the end of the month. 5. Delaying savings until after spending your paycheck. Despite adhering to a budget, it is common to overlook saving and exceed your planned expenses. One prevalent poor savings practice involves putting money into the savings account at the very end of each month after spending on wants and needs. This may result in setting aside only the remaining portion of your monthly income and allows you to dip into those savings while they are easily reachable. To address this habit, set aside a portion of your savings in a savings account immediately after receiving your paycheck. Savings accounts typically have restrictions on the number of transactions allowed each month, which can help discourage impulsive spending. 6. Not having an emergency fund. Approximately 57% of American adults are dissatisfied with their emergency savings. Some individuals may not be allocating funds to an emergency savings account, instead focusing on other financial objectives, resulting in insufficient savings for emergencies. Despite the impact of increased inflation on finances, it remains crucial to prioritize setting aside funds for unexpected expenses. These savings are crucial for handling unforeseen costs and preventing additional debt from accruing through credit card or loan payments. When beginning to establish an emergency savings fund, consider identifying areas in your budget where you can make small adjustments to increase savings and set aside any unexpected financial gains like a tax refund. It is advisable to store your emergency funds in an online savings account as they typically offer higher returns compared to traditional savings accounts. 7. Depending on cash advances. Although cash advances may be essential at times to cover expenses, depending on them excessively can result in a continuous cycle of debt. Financial options such as early payday loans, overdraft protection, or buy now, pay later (BNPL) services are available. They all share a common feature, enabling you to spend money that you do not currently possess. Using cash advances may give the illusion of spending without consequences, but they come with the obligation to repay, potentially leading to increased debt and financial strain. They often come with expensive charges. For instance, the average fee for overdrafts is $29.80 per transaction, as per the latest Bankrate checking account survey. Instead of depending on cash advances, explore alternative methods to create space for expenses. Creating an emergency fund or pursuing a side job are two ways to manage additional expenses. If you often find yourself overdrawing your account, you might consider opting out of overdraft protection to avoid incurring additional fees. 8. Neglecting to consider savings account rates. One may not be aware of the significant fluctuations in interest rates on savings accounts, but the disparity between the lowest and highest rates has been steadily increasing. Currently, some of the most profitable accounts boast annual percentage yields, APYs, as high as 5%, whereas numerous conventional, major banks continue to provide only 0.01% APYs on their savings accounts. Based on a recent survey, 16% of Americans report earning no interest, while 14% are uncertain about their interest rate. If you are unaware of your savings account rate, chances are you are also unaware of what other financial organizations are offering on their accounts, potentially missing out on better opportunities. Furthermore, for those with several savings accounts, being mindful of the differences in interest rates can assist in deciding where to allocate more savings to optimize returns. 9. Utilizing out-of-network ATMs. ATM fees, such as out-of-network fees and surcharges from your bank, are a common expense that can impact consumers' finances. The average fee for using an out-of-network ATM is $4.66, the highest it has been since 2021. It's important to be mindful of fees as they can accumulate significantly in the long run. Imagine withdrawing cash from an out-of-network ATM twice a month. Based on the standard fee, that would total more than $100 in ATM charges annually. To prevent incurring these fees, stick to using in-network ATMs. Consider exploring the bank's website or using your mobile banking app's ATM locator to find nearby in-network ATMs. Think about changing to a banking account that refunds ATM fees as an alternative option. That's all for today. Now you know all the worst habits that are keeping you poor. Press the subscribe button below if you are new and want to know more amazing tips and tricks to become rich. Press the like button if you loved watching this video. One like yours motivates us to make more amazing financial videos. Share this video with all of your friends, relatives, colleagues, and family members for them to learn and improve. Actually, you could become rich by following good money habits and giving up these habits. Money is a game, it's true, but winning in this game will result in gaining importance and respect among others. There are also other tricks to earn money without doing any work. That is inventing. People who really want to become rich invest their money in stocks, bonds, certificates of deposit, and other assets. But for investing, you will need capital. If you don't have capital and are just starting your journey towards wealth and have a poor family background, then I have a solution for you. We researched on the topic of how you could get rich even with a poor family background and found some amazing tricks. Click the video appearing on the right side to know those tricks. Thanks for watching.